Welcome to the Deep Dive, your ultimate shortcut to being truly well-informed. Today, we're diving into the latest earnings call that, well, everyone seems to be talking about. Domino's Pizza's second quarter 2025 results. Our mission, like always, is to cut through the corporate jargon, pull out the really important nuggets of knowledge, and maybe find those surprising facts that matter to you.
Exactly. Think of us as your guides through this dense world of earnings reports. We're here to break down how Domino's did recently, dig into what management's thinking strategically, and maybe most importantly, tell you what it all means for the bigger picture, the QSR pizza world. We'll be zoning in on the numbers that really paint the picture in those forward-looking comments that kind of map out the road ahead for them.
Okay, so let's kick things off with the raw numbers then. What immediately jumped out at you from Domino's Q2 snapshot? Sets the scene right.
Well, the first thing is just how strong they looked. Domino's put up really solid results, showed, good strategy, good execution, even when things are kind of challenging out there for pizza places overall. Their profit growth actually came in a little bit ahead of what people were expecting.
Ahead of expectations. Okay.
Yeah. Income from operations jumped, 14.9% if you take out the currency noise. And even if you adjust for selling some stores back to franchisees, that refranchising gain, and some one-off restructuring costs, it was still up a very healthy 13.2%. That tells you they're not just making sales, they're making profit efficiently. That's a big plus.
That is a solid profit story, especially right now. How did that flow through to sales, both here in the U.S. and globally?
So globally, retail sales grew 5.6%, again, taking out currency swings. But the really interesting part is the U.S. story. Retail sales there jumped 5.1%.
5.1%, okay.
Now, that number's good on its own, but it's really something when you think the whole U.S. QSR pizza market was basically flat, maybe even slightly down through the first half of the year.
Wow.
Yeah, so Domino's isn't just growing, they're actively taking share from competitors, big time.
Outpacing a flat market like that really is a statement. And how much of that U.S. boost was down to that new Parmesan Stuffed Crust pizza they launched?
It's a pretty decent chunk, actually. U.S. same-store sales, that's sales at existing stores, they sped up to 3.4% for the quarter. And yeah, that was mainly driven by the new Parmesan Stuffed Crust.
Okay.
And if you dig into that number, their carryout comparable sales, just the carryout part, were up an amazing 5.8%.
5.8% just on carryout.
Yeah, it was their highest quarter ever for average carryout orders, ever.
Wait, highest quarter ever for carryout. In today's world where everyone talks delivery,
Yeah.
that's really something. How are they doing that? And what about delivery itself?
It is pretty remarkable, right? It shows a specific strategy is working. Delivery was positive too, up 1.5%. So they saw improvement there, both on their own website and app. And through those delivery apps like DoorDash and Uber Eats, the average check, the average amount people spent, got a boost from a small price increase, about 1.4%, and also from the stuffed crust being a bit pricier. Although that was offset just a little because carryout orders tend to be a bit smaller than delivery.
What's that?
And internationally, sales grew 6%, again, ex-currency. Same-store sales up 2.4%. Management said they haven't really seen any big hits from, global economic worries or political stuff in those markets yet, which, again, points to how well they're running things.
So strong sales, strong profits, grabbing market share. What about store growth? Are they still expanding? And what are they doing with their cash?
Yep, still expanding. They added 30 net new stores in the U.S., so the total count here is now 6,661. Internationally, they added 148 net new stores. That steady growth, especially outside the U.S., is really key for the long run. And with their cash, Domino's bought back about 316,000 of their own shares, spent $150 million, average price $475 share.
Okay.
And they still have authorization to buy back another $614 million worth. That's a pretty strong signal. They think their stock is a good buy and they expect to keep generating lots of cash.
Definitely sounds like confidence.
Okay.
Okay, those numbers are compelling. Now let's unpack this. Let's get into the strategies, the pillars management talked about driving these results and what they see for the rest of 2025. These gains didn't just happen by accident, right?
Absolutely not. They were very clear. They attribute the success to what they call their hungry for more strategic pillars. These pillars are designed to work together, they say, to deliver more sales, more stores, more profits. Let's start with the first one. Most delicious food.
And that's got to be where the Parmesan Stuffed Crust fits in, right? Sounds like it really delivered.
It absolutely did. They highlighted it as like one of the biggest new menu items in their history. Seriously. Hit the high expectations, brought in new customers. People may be choosing Domino's over someone else specifically for it, and the sales mix was right where they thought it would be. But what's really interesting, maybe even more important, is they specifically praised how well the stores handled making it. It's a more complex pizza to make.
Right, I can imagine.
Yeah, so it shows that the training they invested in actually worked. And customer feedback, significantly better than other recent launches. So this isn't just a popular pizza, it's a strategic weapon. It fills a gap they had, because apparently a lot of customers used to go elsewhere because Domino's didn't have stuffed crust.
So it's plugging a leak, basically.
Mm-hmm.
And it's not just a flash in the pan, not just a limited time thing that'll vanish soon.
Exactly. Management made a point of saying these big launches like the stuffed crust and last year's New York-style pizza, they intend for them to be permanent. Not LTOs, not limited time offers. The whole strategy is about sustained growth, taking share in major pizza categories that aren't going away, building a permanent advantage.
That makes total sense for long-term growth. Okay, pillar number 2, renowned value. How are they hitting that note, especially when, everyone's watching their spending?
Well, it's a few things working together. National deals, their Domino's Rewards loyalty program, and also growing through those delivery apps, the aggregators. That loyalty program, Domino's Rewards, was a big help to their sales growth, especially for carryout. They actually redesigned it specifically to get more carryout customers signing up and using it.
Ah, interesting.
Yeah, and the number of active users keeps going up. They see it as a multi-year driver for sales. And here's a really cool insight they shared. Apparently, when people redeem points at the lower levels, like 20 or 40 points for sides, instead of waiting for 60 points for a free pizza, the total check size actually ends up being higher.
No way.
Yeah.
So getting a free side encourages them to buy more overall than getting a free pizza does.
Seems like it. It's a clever bit of psychology, nudging slightly higher spending.
That is clever.
Yeah.
And the aggregator story, DoorDash, Uber Eats, you mentioned that. Is that still ramping up for them?
Yeah, very much so. The national rollout with DoorDash, which is the biggest player for pizza delivery apps in the U.S., just finished. They took what they learned from launching on Uber Eats earlier, applied those lessons, and now both Domino's and DoorDash are starting to put marketing money behind it. So the expectation is that this will be a meaningful boost to U.S. sales in the second half of the year, especially since DoorDash is like twice as big as Uber Eats when it comes to pizza orders. The potential is pretty big. Their goal, they want to get a similar share of the pizza market on these apps as they have off the apps, which is, well, ambitious, but hints at a lot more growth if they can pull it off.
That is a bold target,
Yeah.
capturing that same dominant share on the apps. What about their general approach to pricing? How do they balance value with, needing to make money?
Their philosophy seems to be about consistency and long-term value perception, not just chasing short-term price hikes. Like their famous mix and match deal, it was $5.99 back in 2009 and only recently moved to $6.99. That's pretty stable over a long time.
True.
They use a lot of research, quantitative stuff to figure out pricing that helps franchisees make money on both the top line, sales, and the bottom line, profit. And they actually noted that growing the number of orders is more closely tied to franchise profit growth than just jacking up the price per order.
Interesting distinction.
Yeah. So they try to keep price increases at or below how much consumer incomes are growing. And that whole shift to renowned value back in 2023 wasn't just about being the cheapest. It was about offering value that gets people talking, that feels genuinely good. Like bringing back the best deal ever promo, lets people load up on toppings, up to 7. So it combines a great price point with, lots of deliciousness, value plus quality.
Okay, that leads nicely into their third pillar, best-in-class franchisees. This always sounds like their secret weapon. How are they nurturing that relationship?
They definitely see franchisees as the, quote, secret sauce. You can tell they just refranchised, sold 36 company stores in Maryland to a new franchisee. Well, new to owning those stores, but someone who's been in the Domino's system for over 20 years.
Keeping it in the family, sort of.
Exactly. They're constantly looking at the system, making sure stores are run by strong, experienced operators. It strengthens the whole brand long term. And they really leaned into their advantages here. Best franchise profits in QSR pizza, biggest ad budget, best supply chain, biggest rewards program. Your average franchisee owns about 9 stores. That adds up to serious cash flow, real financial stability for those owners. And the system's deliberately mixed,
Right.
different sizes of franchisees, so they don't have too much risk tied up with just one or two huge operators.
Makes sense for stability. You mentioned the supply chain earlier. Is that still a big profit driver for them, those efficiencies?
Oh, yeah. Getting better deals on procurement, finding efficiencies, that's been a huge driver of their supply chain profits for the last, say, 2 or 3 years, both food costs and other stuff. Now, they did kind of signal that while those gains have been really strong, the rate of finding new big savings might slow down a bit, just because they've already gotten so efficient.
Right, diminishing returns.
Kind of. But the key is those savings they've already found. They're baked into the baseline now. They're not going away. So it's like they've permanently lowered their cost structure, which is huge for keeping margins healthy.
Okay, so they've locked in those gains.
Right.
Now, this is where it gets really interesting for me. Beyond Q2, what did they say about the outlook? For the rest of 2025, the industry.
Yeah.
What's the crystal ball showing?
Right, the outlook. So for the full year, 2025, they expect global retail sales growth to be generally similar to 2024. In the U.S., they're still aiming for 3% or more same-store sales growth, but they expect it to be stronger in the second half.
Why the second half?
Mostly timing. Things like the DoorDash partnership really kicking into gear. That's assuming the overall pizza market stays kind of pressured like it is now. Internationally, they're guiding to 1 to 2% aim-store sales growth. They're building in some caution there for, potential global economic bumps or geopolitical stuff, though, like we said, they haven't seen big issues yet. Store growth. Over 175 net new stores expected in the U.S. international net store growth, similar to 2024 levels. One small headwind. Foreign currency is now expected to drag on operating income growth by about 1%, but that stuff's always volatile. Overall operating income growth, though, still projected around 8% if you exclude currency, those one-time expenses, and the store sale gains. Pretty solid growth expectation.
You mentioned the pizza category is flat earlier. How do they view the whole industry right now, and where does Domino's fit in that tougher picture?
Yeah, historically the category grows maybe 1-2% a year. So flat in the first half actually means fewer people ordering pizza overall, offset by higher prices. Negative traffic. Management thinks the category will get back to its usual growth eventually, but they basically said Domino's is built for this kind of environment. Meaning they see the challenges other brands are facing as actually good for Domino's because they have the strong franchise profits, the efficient supply chain, that massive ad budget. It lets them play offense with value and new products. While others might be on defense, just trying to cut costs or hold on to customers, they think they can take even more share in this environment.
Playing offense while others play defense. Got it. And are they seeing that play out across different types of customers?
Apparently, yes. They specifically mentioned seeing growth across all income groups in Q2, including lower income customers. So their value message seems to be resonating broadly.
Okay. What about outside the U.S.? Any specific hotspots for growth?
Yeah.
Or new food ideas beyond just pizza?
Yeah. Internationally, India and China are huge growth drivers. They expect their master franchisee in India to open 250 stores this fiscal year.
Wow, 250 in 1 year.
Yeah, massive. And in China, the plan is for 300 stores in their current fiscal year. So really rapid expansion there. They did mention some known store closures in Japan earlier in the year, and they're working to get more clarity on future opening plans there, which kind of depends on store level profitability. As for new food, they already have chicken, sandwiches, etc. They said they're always listening to customers. They even hinted they're prepared for future things, maybe needing new equipment like fryers. They mentioned they've actually created more space inside stores through operational changes.
Oh.
Yeah, and their tech system, DomOS, could potentially handle integrating new cooking platforms. But nothing specific announced right now, just sort of planting a seed maybe.
Interesting foresight. And digitally, any upgrades happening there? It's so crucial now.
Definitely. They're rolling out a brand new e-commerce platform this year. Testing apparently shows it converts visitors into buyers better, leads to higher sales than the old one. But they're rolling it out carefully, methodically. Which makes sense, right? When 85% of your sales come through digital channels, you don't want to mess that up.
Absolutely. Measure twice, cut once there.
Right. And one last point. On margins, they cautioned against reading too much into the margins at their company-owned stores as a sign for franchise profits. It's a small sample size. Franchise profits, they stressed, are still very healthy and expected to grow. Corporate stores had a one-time insurance hit in Q2. Oh, and food costs. They were up more in the first half as expected, but should ease up in the second half. They still expect low single-digit food inflation for the whole year. good news for profits.
Okay, so we've gone through the numbers, the strategy, the outlook. After this whole deep dive, what does it all boil down to for you? What does it mean for someone watching this space? What are the big takeaways?
Well, what really stands out is just how clear and frankly how effective Domino's strategy is for taking market share, especially in a pizza market that's basically flat overall, pulling off 5.1% U.S. retail sales growth when the market's doing nothing. That shouts competitive advantage, that shouts execution, and the Parmesan Stuffed Crust. It's clearly not just a gimmick. They see it as a permanent, long-term way to win customers. It fills a gap they used to have, brings people in, and gets them spending a bit more. It's strategic, not just popular.
So these big moves, they're not just temporary boosts, they're building blocks.
Exactly. Foundational. And then you add the full DoorDash rollout on top of the success they're already having with Uber Eats. It really looks like these delivery apps are a genuine multi-year growth engine for them, not just a one-time bump. That goal of getting the same market share on the apps as they have off the apps, that points to a huge runway for growth if they can capture it, tapping into whole new groups of customers. And their whole renowned value thing, it works because it's built on that foundation of strong franchise economics, the huge ad budget, the super efficient supply chain. That's what lets them be on offense.
Right.
They can offer deals and innovate in ways that put pressure on competitors who are maybe struggling, who are on defense. It could lead to more consolidation, weaker players closing stores, which is actually a pattern we've seen in pizza over the last 10 years.
It really does sound like they're built to navigate this kind of economy, almost using the headwinds to their advantage.
They certainly think so, and Q2's numbers seem to agree. That steady growth in carryout, boosted by the revamped loyalty program, shows how powerful digital tools and smart loyalty tactics can be, even getting occasional customers to spend more. And finally, buying back their stock, that disciplined capital use, shows management is really confident they'll keep churning out cash. So yeah, this deep dive really highlights that Domino's isn't just floating along with the market. They're actively trying to shape it through products, value, operations. That could mean strong, sustained performance for quite a while.
Okay, that brings up a fascinating question. If we push these insights to the limit, just for fun, what kind of audacious, maybe even outrageous, but still plausible strategic play could you imagine stemming from everything we just heard?
All right, let's brainstorm here. Purely hypothetical, of course. This is absolutely not investment advice. Let's be crystal clear on that.
Understood. Intellectual exercise only.
Okay. So if I were pitching an outrageous but plausible trade idea based only on this call, it might be something like Homeland Domino's DPZ stock and short a basket of smaller, financially weaker U.S. pizza competitors.
Okay, long the winner, short the potential losers. What's the core idea?
The thesis is that Domino's isn't just positioned to grow in this flat market, they're positioned to accelerate their market share gains. They explicitly said they're on offense with value. They're using their strengths, franchise profits, ad spend, supply chain to offer prices and products that smaller guys just can't keep up with. It puts enormous pressure on them. Then you add the multi-year boosts from things like stuffed crust becoming permanent, the full DoorDash effect kicking in, the loyalty program. These things just increase the pressure on those weaker players.
So it's less about the whole category shrinking and more about Domino's squeezing out the competition.
Exactly. It's not a bet against pizza overall. It's a bet on Domino's consolidating the market by forcing some of those less efficient, less capitalized competitors to close stores, which, again, is what's kind of happened historically over the last decade. It's a conviction play that in this environment where value is king, Domino's unique ability to deliver that value profitably lets them turn industry headwinds into their own tailwinds. The strong get stronger, the weak fade.
That's definitely an audacious take based on their aggressive stance.
Okay, and that wraps up our deep dive into Domino's Q2 2025 earnings call. We've covered their, frankly, quite strong performance, these big strategic moves like stuffed crust and the aggregator push, and how they're hungry for more pillars seem to be really driving those market share gains.
Yeah, we've seen how that focus on franchise health, smart value, and constant innovation really sets them apart in a tough market. Lets them play offense, like we said. And just one last reminder, everything we talked about today is just for informational purposes. It is definitely not financial advice.
We really hope this deep dive gave you a valuable shortcut to getting truly well-informed on Domino's and the whole pizza delivery landscape right now. As you think about all this, what surprised you the most from the call? We invite you to keep digging into the implications of these insights on your own.